Let's bring on board Kunal as well as Naresh, and we have also Vivek Iyer who's joining us on the show. Kunal, let me come first to you. Today, tomorrow, this week, or only post June 4th, do you think that we'll hit fresh record high levels for markets? Because you're not too far away when you talk about the Nifty record high at least.
In fact, for a change, if the India VIX continues to rise, I believe that the new high could probably occur very soon because, a 22%, 22 number on the India VIX and a 20-point down on the Nifty in the morning, I think was just an indication that the markets have already adjusted towards a slight increase in the volatility. So I believe now we could be at a zone where a further mild rise in the India VIX could actually act as more of a impetus or a catalyst towards the upside rather than the downside for the indices. So I would now believe that the higher leg of momentum could probably occur once the India VIX maybe crosses 22.5 to 23 levels, and if that happens in the next couple of days, there could be a strong possibility of new high.
Right. Naresh, hi, afternoon. Guess it's all about metals. They are the ones which are shining bright. And in fact, as we speak, the Nifty Metal Index has hit the 10,000 mark for the first time ever. Do you see a sustained momentum, or do you think it's time to book profits?
So it's time to keep switching. So earlier it was all about looking at mining companies, where we were looking at NMDCs and Vedanta, etc. And now the shift should be towards the steel and producers directly. So that is where the shift is. So from Vedanta, one could get into Hindalco as well as Tata Steel as well as JSW Steel. So my viewers will get further momentum in the steel names and say some bit of a pause in Vedanta, Hindustan Zinc, etc. Or they've overrun in the near term. But the trend is still positive across the metal pack. So just a shift here from one stock to another.
Vivek, what is your sense? Are we in for a last hurrah before the election cycle or before the election results?
Yeah, I think it's at least the sentiment seems to be quite bearish, given that we are close to an all-time high. So I would be surprised if we don't see quite a rally going up to elections.
Okay, let's look at some of the trending names. And Kunal, private banks, they're unable to still, pull through. When is it that you see a meaningful move coming in here?
Very difficult to anticipate. I am not sure.
The claim is that FIs are going to come back after June 4th. They're sitting on shorts. So where will that money find its way? It has to be private banks,
it has to
IT,
be private sector banking stocks. But as of now, the markets are just not into any kind of an indication of buying these private sector banking names. Look at the financial services stocks and the likes of Bajaj Finserv, Finance, etc. These stocks are still trading at sub their long-term moving averages. So there's absolutely no buyers into these stocks. And that's why you're seeing these stocks just into a 0.5% to 1% range. Whereas on the other hand, the PSUs, the defense, etc., they are seeing fourth, fifth consecutive, I think, week or day of price action rally for themselves. Many of them have hit back their new highs in 52-week highs. So I think it could be a matter of time, but I think we'll have to wait and watch.
What's standing out today is actually Balkishan Industries. Big move. And this is a stock where everybody has sort of written it off. Concerns, centered around the fact that Europe will be in problem. Concerns that the US will not make a comeback. So what is Balkishan Industries? It's a tire company. So what is so different about it? Well, they're a specialized tire company, which means that they do they make those specialty tires which are used by the agriculture sector, which is used for off-roading, which is used to really move heavy equipment. Unlike normal tire companies who are making for car, two-wheelers, four-wheelers, Balkishan Industries is a specialized tire company. And when there was a downturn in the agrarian economy in US and the agrarian economy in Europe, it went through a tailspin. But now they're making a comeback. So early evidence that US economy is stabilizing, otherwise this sector or this company would have not done well. Naresh, this in a sense has been like an erstwhile favorite. If you look at the 10-year chart of Balkishan Industries, it has created huge amount of wealth. It's only last 1 or 2 years, ever since the Ukraine crisis happened, it has lost some direction.
So for the last 2 years, the stock was relatively sideways, and it has gone through such cycles even before, back in 2018 to 2020, wherein it was sideways and had taken a 40-50% drop. So for now, we've recovered back above the highs of 2021, which were closer to 2,800 odd levels. So after today's move post numbers, it is overbought in the near term, but a retest of 2,700, 2,800 would be a buy zone because it's a structural breakout in terms of the last 2 years. 2,800 on the upside, 1,800 on the downside was the range. So eventually a longer term target could be much higher. So would wait for a drift down lower after this price action. So closer to 2700, 2800 is an entry point and still looks good for the longer term.
Right. Vivek, let me come to you. Let me talk to you about these asset management companies. How are they looking to you right now? Because the fact that a lot of them also link the businesses and the sentiment of most of these AMC companies to what is exactly happening in the markets, but their performance has not been that enthusing, isn't it?
So I think asset management companies, of course, have done extremely well in the last 1 year, but they are also priced to perfection and beyond. I think if you were to compare them to what asset management companies are priced globally, we are far, far many standard deviations away from that mean. And I think at some point, it will, I think investors will have to be cautious in these companies in terms of how they are valued.
Example, if you're comparing Vanguard and let's say BlackRock with Indian asset management companies, will that be a fair comparison? Because those companies, they have a lot of ETF. In India, there is no ETF. In ETF, you get very low commission. That's the reason why the pricing and the differential in P multiple is there.
No, very true. But the question is, what future are we moving to, and is that going to be as active as, or is the share of actives going to be as high as it is today? And then, so sure, I can understand there being a premium, even a substantial premium, given the growth runway. But yeah, still, it's probably an avoid for me, given how far up the valuations are going.
There's one data which I want to just look at, and the data which we've been using from last 7-8 days. What was the SIP number in 2014? And what is the SIP number right now? 2014, if one looks at the average monthly SIP, it was not even 2,000 crore a month. Today it stands at 20,000 crore. At 20,000 crore also, the number of active mutual fund accounts in India are actually 6 crores, which is nothing if one looks at what the global averages are and what the Indian saver currently is. That's the data. No, not this one. There's a SIP data which you want to look at. This is the market stack up data. 1,200 crore has become 20,000 crore. And if you look at the penetration level at 2014, it was less than 3%. In the mutual fund industry, it is still less than 10%. And the number of active demat accounts, number of active mutual fund folios in India are only 5 or 6 crores. And which is frankly nothing, considering that how many food delivery accounts we have, how many Netflix accounts we have. So for me, I think it's a long trend. Naresh, this financial inclusion is a multi-year trend. What would you bet on? Would you bet on AMCs? Would you bet on CDSL? Would you bet on good old NSE, buy it in the private market?
So the bets are across the board. So one could be looking at CDSL and BSE, NSE as the clear-cut bets because they do not have as much cyclicality as compared to what happens with a broking firm or an asset management company. So that's the trade. But the fact is they've already gone up quite a lot over the last 2-3 years. And the SIP data has been a game changer in terms of what happened is when we got the ECS electronic clearing system, that is where SIPs started being sold. And 2020 has been the point where we've started direct equity exposure because now it is easier to open an account, unlike which it used to be 40 signatures. So the view is across the board, one could look at broking companies on a decline. And CDSL and NSE, BSE remain the classical bets for this inclusion.
Looking at some of the other buzzers today, and while SBI, of course, is holding out very well, metals we already addressed. The Adani names are propping up nicely. So Adani Ports is higher by nearly 3%. Adani Enterprise is higher by 3.5% or so. And then the entire energy basket as well is looking pretty okay. BPCL is on a tear, about a 3% uptick coming in there. ONGC as well, higher by about 0.5%. And from amidst the autos, M&M clearly has been showing leadership after its earnings that came by. Another 1% put on in trade today as well. Naresh, revisit the charts for M&M around those 2,500 odd levels on the futures.
So M&M in the near term is overbought. The last breakout for the stock was at 2,000. We've seen a spike to 2,200, then the spike from 2,200 to 2,550 very quickly. expectation is that it could go sideways, wherein 2400, which was the gap up a day back, should act as a support. So 2400 to 2550, I would expect some bit of a range bound move, and the leadership in the space shifting to an Ashok Leyland or a Escorts Kubota.
All right, so that's a view coming in on the auto space in particular. But on that note, we slip into a break in this edition of Closing Trades. When we come back, we will talk about where the market is headed in the next 45 minutes of trading session.
Is the metals bag that's been shining bright? In fact, the Nifty Metal Index has hit that 10,000 mark for the first time. So let me take it across to Ashesha, find out what are the factors which are at play and acting as a tailwind for metals, Ashesha.
Well, absolutely. Metal stocks are shining bright today. Nifty Metal Index is the biggest sectoral gainer today, trading at all-time high levels. It crossed that 10,000 mark for the first time ever. And remember, it is not just today. Nifty Metals have been outperforming broader markets for the last many months. So now if we look on a year-to-date basis, Nifty Metal Index is up 25% at a time when Nifty 50 has just given returns of nearly 4 to 5%. In the last 1 month alone, Nifty Metal Index is up 12% at a time when Nifty 50 has barely managed to give any returns. This is in the last 1 month. Some of the top gainers on the Nifty Metal Index in the last 1 month include the likes of Hindustan Zinc. The stock is up 12% today. It is up nearly 75 to 80% in the last 1 month. We have Vedanta and NMDC amongst other top gainers on the Nifty Metal Index, which are up nearly 20 to 30% in the last 1 month alone. One of the main reasons, of course, is the surge in commodity prices that we have seen globally. So zinc prices, for instance, are up nearly 4% in the last 5 days alone. We have copper prices which are at record high levels. Copper prices have risen 7% in the last 5 days and are up 21% on a year-to-date basis. Nickel prices too are trading at 9-month high levels with a surge of nearly 12% that we have seen in the last 5 days alone. Now, the reason for surge in commodity prices is rising demand, improving economic macro factors from several global economies, the likes of US and China. We also have US and UK that have imposed restrictions on Russian metal, which could create some supply concerns, because of which commodity prices globally are rising. So yes, of course, we have several factors which is leading to the rise in global prices, commodity prices, and that is the reason metal stocks back home in India are on a tear today.
Metal stocks and why they're on a tear today. Thank you so much for that, Ashesha, for outlining that for us. But let's put the spotlight then on one of the stocks that is among the top loser on the Nifty today, Vivek, and that is Nestle India. A lot of news surrounding this particular counter. You also had the shareholders go ahead and reject the royalty. You saw in the special trading session the stock actually surge in trade. In fact, we're seeing the opposite move today. What's your take coming in on Nestle in the consumption pack as a whole, FMCG pack as a whole? Do you think it's a bright spot, or do you think that the valuations are still a little expensive?
I think we've now seen this story so many times, whether it is with the private banks or it's with the underwear companies, where, or it is with FMCG. It's the same story again and again and again, which is if you pay any price, then eventually you're going to pay the price of not having any returns for many, many years, right? So I think broadly, any of these companies that trade at extraordinary valuations are in a void for me. Nestle, of course, a phenomenal company, great return ratios, but everything is already priced in the stock price. And it's not really where I would go and seek extraordinary returns. Of course, I can be wrong, but I feel like the risks outweigh the rewards.
But Vivek, appreciate your time. So glad you could join us. What do we have? We have BEL, which is holding on very smartly. We've got BHEL, which is holding on very smartly. But what's coming to my attention is actually the stock which just fell when there were concerns about balance sheet and about enforcement directorate concerns. And I'm talking about Polycab. It was the hero stock of first half of this year. Then came all the assumptions and all the concerns centered around tax queries. The stock fell. Look at, not today, but if you just look at the YTD chart here, it's got an extraordinary chart. First the rise, then the flat fall, and then the recovery from there. So in fact, Kunal, it is actually much above than what it was before all that ED concerns happened.
Yeah, I think it fell by almost 30%, 5,500
What
to...
was the high that time?
5,500 approximately.
And now it is?
Fell down to 3,800 and now it's at 6,700.
Just imagine. I mean, when a good company goes through a temporary distress, and that's the time when you buy that stock, that's the time gains are maximum. And we've seen that happen again and again. Polycab is one example. You bought the distress in this year itself.
Polycab, the entire sector fell. I mean, all your RR cable, all of them were down as much.
I mean, I don't track them that closely, but I would imagine that what happened to Polycab would have had impact on others. But the underlying tailwind in the sector is so strong. Whether it is energy transition, whether it is solar to, whether it is solar to real, or whether it is wind to power, whatever may be the underlying theme, the entire sector is enjoying serious amount of tailwind. Polycab, Havells, RR cable, that entire space is looking mega excited. But what a move it's been. Havells also, look at it. Wire, complete turnaround. RR cable, IPO was super hit, came cracking down like Aisha was saying, almost to like 1,200, 1,300, and now it's 1,740.
That's Polycab for you and the cable companies, but there's another case in point where the stock actually fell post-news and then saw a recovery, and after that it's only been falling, and that has to be Paytm, because you saw the stock actually see some sort of a recovery coming in, hopeful that there were some buyers in the market. But that one has only fallen off those levels of 400. Now it's actually recovered to over 350 odd rupees per share mark as well. So that's Paytm for you. That also had a similar impact to what Polycab had on news-based information, but that one has not been able to actually see that sort of a recovery. There you go, 44% downtick in this year alone. Kunal, and any scope of revival in this one by any chance?
It doesn't look like. I think it's still reeling below its key moving averages. So, in a vibrant market, when a stock is unable to break past even about the medium-term moving average, for example, the 50 DMA, that itself is a sign of weakness of trend which is persisting and continuing for the stock price. So I think these are the kind of stocks which continue to underperform even if the market gets into a second zone of the upside. But I believe that it's best to avoid these kind of names rather than having any kind of a contra expectation that these stocks would probably try and come up and cover up the underperformance.
Okay, on that note, Kunal, let's have your closing trades as well.
So I'll go with ABFRL stock, which I've been bullish on earlier. It's confirming a breakout yet again about that 265, 270 plus mark. So looks interesting even from a short-term play now.
Right. Naresh, what about your closing strategies?
So that would be a buy on JSW Steel. The stock has hit a new all-time high today. Broken out about that 900, 910 mark, which was the resistance for the last 2 weeks, as well as the top end December 23 was around this 900 mark. So looks like a fresh breakout and could see follow-up over the next few sessions.
So those are the closing trades coming in from our experts. But on that note, we slip into a break on this edition of Closing Trades. But optimistic commentary coming in from multiple companies, HAL, RVNL, as well as City Union Bank. All are buzzing on back of the earnings. Listen in to what the management had to say.
Our intention is that to see that this 13% has become the benchmark. Now we should at least at the minimum, we should sustain this 13%. And we are hopeful that with more and more execution of orders coming through in the next few years, the growth rate is likely to pick the momentum, and we are confident that we should be able to reach around 15% in the next 2 to 3 year time frame. What is more important is that this growth rate is going to be sustainable for the next few years, given the current order book position and visibility of orders in the pipeline for the future.
We expect in next financial year, that is 24-25, we should have an order book of around 1 lakh crores, the top line 23,000 crores, bottom line 1,600 to 1,700 crores. So this is for 24-25. And with the same kind of projection, we can predict for 25-26. We are eyeing for business in the neighboring countries like Bangladesh, Nepal, Sri Lanka, Mauritius. There are large number of projects in African countries. We have been shortlisted in expression of interest in Africa, and 2 projects we have been shortlisted.
Whatever we had in the fourth quarter is a very good indication on how things will improve in the current year. Once we cross a double-digit figure during the course of the year, we will be in a position to give the exact expectations and the forecast for the current financial year. And finally, when things come to ROA, you can clearly see things have crossed 1.5%, which is our long-term average. So the things are back on track.
If you like this video, then like, share and subscribe to ET Now.